Okay, good morning traders. It's Friday morning, November 4th, 2016, and this is our PTDO alert, our prepared to deploy order. We're getting ready. I think we're on the cusp of being in the window to deploy our capital to the long side. So we haven't had an extreme move to the downside in quite some time, and is muted and as mild as this little down move is in the stock market, it's starting to fall into that extreme move profile. Something that in this market environment, just a 3 to 5% pullback fits that description right there. So we're really close. We could see some more downside, and it would be perfectly okay. But anyway, we need to be ready because I think it's getting ready to throw us a early Christmas present here, or at least right on cue with normal time of a place in the market in the time of the year where we typically see down moves resolve themselves. You know, this late October, early November time frame, getting ready to roll into the Christmas window. So it's everything looks. The Fed didn't provide any type of news that traders like to grab a hold of. You know, their words didn't inspire the market, which I am not a proponent of the Fed speaking in the first place. But you know, this is the kind of setup that you look for when things are looking very mild. I won't say bleak, but nobody's market's drifted down for like 7 or 8 out of the last 9 days. Nobody's expecting the market to drift down the way it has. So just those things combined, we got some sentiment models that are really screaming that this market's going to be higher in a couple of weeks from now. So I'm hoping we get another down day today on Friday. That would just be incredible going into election week next week. That would set us up for, I think, just a killer trade to the long side. Start positioning ourselves, and so let's take a look at a couple of charts here just to see what I'm looking at. Alright, let's close that out. Blow this up just a bit so you can see it a little better. Hey, what we have here on the top chart is the VIX. The bottom chart is the SPX. So what I want to show you is every time that the VIX pierces its Bollinger Band to the upside, which is a statistical measure that indicates that we're getting into extreme territory. And guys, the market always resolves itself to the upside when we get in these. It may take a couple of thrusts up on the VIX to get it above, but you go back for as long as the VIX is traded, and that's a common theme. So this is one of the things I look at to see if we truly are in an area where the market could rally from. So just go back to the far left hand side of the chart. VIX pierces the upper level here, coincides perfectly with the down move, which resolves to the upside there. Pierces here, it starts, doesn't catch the bottom, but it's just prior to, and then you get that little small rally off of that right there. So we start piercing here. This is, of course, the January time frame. This is actually where I thought we were getting into a window in January where the market could rally from, but we had another 2 weeks left. So we were right in here. This is exactly where I thought we could rally from, but we had another 150 points to the downside. It concluded once the VIX pierced it again, and then we had this little up move, thrust back down, hit that upper boundary again, marked the exact low of the market, and she was off to the races. So the next time we pierced it right here, started catching it on the down move right there. We pierced it again here, almost nailed the bottom completely. Nice rally up. We pierced it here, going into Brexit. Had that fake move up, pierced it really good there. This is where we had just some of the most aberrational moves I've ever seen in the market. Bond market up eight handles, 8 points in just an hour and a half. Just one of the most vicious moves I've ever seen in the bond market, which was completely, as we're seeing now, just completely uncalled for. You know, in the next 10 points up in the bond market straight up was just utterly ridiculous. We were all over that. So, but anyway, in the stock market, pierced it here, caught that down move in what was one of the biggest rallies, you know, off of the lows that we've seen in quite some time. So we start piercing it here again. So it starts tracing out these little small bottoms. And but you know, when you come from this small range in the Bollinger Bands here, and you start piercing it, you're not going to get the big moves up. The big moves up occur when this VIX pierces it after, you notice how the Bollinger Bands expand. When it starts piercing it after the expansion, that's when you get the big moves up. Okay, look at what we're doing right now. We're expanding. Okay, so we're in an area where we could rally from. We've got sentiment models backing us, telling us this market. There's several studies out right now that just always rally. That's what I've been reading over the past 3 days. Hey, never have these failed. So not that they're pinpointing a bottom, guys. I just want to make sure, and I'm not saying today's the low or anything, but we're definitely in an area where we can rally from. Anytime we get the VIX above this line right here, at some point in time we're going to get the rally. And now that we're expanding, this could be a big rally up. So that's the first thing I look for. Second thing is, notice the horizontal line here on the SPX. It's a crucial level, guys. Look at where it bumped its head right there. The first run up fell short, come back down, it faltered. That was the line it faltered from. When it broke above it, back here after the Brexit, she was off in the races. Look where it retraced back down to. Rallied back up, came back down, bumped again, up. Of course, we're making a series of lower highs, and then it broke through. So this is one area right here. If you don't feel comfortable trying to call a bottom or tranching in, wait till it closes above this line. That's going to be the all clear signal that hey, get back in this market. So this is almost like the scenario one that I like. What's a little different from this than the scenario one? Let's go back here. Scenario one would be down, up, a move down below, which we did in the futures market. We moved just slightly below this low right here and then closed back above it. So that's a scenario one for me. This one's close to it. You know, this was the down thrust. We rallied up. Now we're below it. So a close back above that right there will indicate that, in my mind, that we're going higher into December. All right, so let's take a look at some charts here. We're going to look at some of the big stocks just to confirm what I'm telling you, and then a signal that would indicate that, you know, we could see some higher prices. So what I have here is the VIX plotted on with a couple of moving averages. And again, I just want to use the VIX just as a measure for an extreme move to the downside. So you can see anytime we get below that VIX, we're in extreme territory. Sometimes it doesn't end. You can see over here. Oh, let's see. There we go. Okay. Yeah, let me get my cursor. All right. So you can see here we're probing the VIX to the downside. It's an extreme move. This was a very extreme move in Tesla. All right. So it resolved itself once it closed above the 13-day moving average. So that was a good place to get back in here. Oh, by the way, there was a trader that it's partnered up with with the Fib Queen, John Carter, he was long Tesla in here in option trades, a public trade where he personally made over $1 million on this move up right here. So that was this year in Tesla. It was you can Google John Carter $1 million trade, and it will not Google but YouTube it, and I think it'll come up. Anyway, John's he's a friend of Tasty Trade. He doesn't trade exactly like we do. He's more of an option buyer. He'll sometimes sell, but he's primarily an option buyer, a trader on the directional side. But anyway, let's get back to the task at hand. See Tesla down again here. We close above the 13-day, takes us up. Close down below again. Close above, takes us up. So you get a muted move up here. Tag below, closes above. So that's what we can expect once we get back above this 13-day moving average again. That's just a good signal to get back in. So we can look at some other stocks. Let's take a look at Apple. Let's go back over here. Let's look at this big down move in Apple. Again, tagging it. It closes above, fakes us out once. We move above, and this one kind of holds. It never tags below again. This one really holds. It doesn't break down below, but it's enough of a down move to scare you to think that you're wrong. But it found, after it closed above this, it found the lows on the next thrust down, and that's what I've generally found out with this. I've watched this for years, and the move above, if it fails, it usually finds the bottom on the next thrust down. So here we're tracing out that bottom and just get that huge run up. Okay, we're down below here, close above, takes us back up. Now we start tracing down below, we close above, takes us back up. Depending on where, of course, this whole move right here is part of that. So we again look at this, we tag it, we close above. It thrusts back down, but it finds the low within about 3 days and then it propels it back up. So, one of the things we're looking for is a close above to signify that we might be very safe in playing to the long side. So just understand some of the characteristics of what I'm showing you here, which is it can resolve itself quickly to the upside, like in this example, or it can indicate that it's about to, the bottom's about to be found by a close above and then finding the bottom shortly after. That's a very, very common trait of this this study right here. Google, same way. Down, close above, a little fake out, but then shoots way up, tags it, closes above, traces out a bottom over 2 weeks and then back up. So yeah, you can just follow this thing, guys. This is the Bollinger Band. It's set for default, the default indicator on Tasty Trade, and then I just use a 13-day moving average, just a short-term moving average to kind of see when the down move is over with. But we're back into the extreme move again. Now all of these NASDAQ stocks are starting to sell off, starting to get some weakness, starting to scare everybody. Hey, how can these stocks fall? Why are they going down? Hey, that's because these are stocks. They're supposed to. They're not supposed to go up every day. They're supposed to present opportunities for the bold to take advantage of, and that's kind of what we're doing right now. Netflix doesn't really look appealing to me. Facebook, I guess, got clobbered on earnings. You can see, I think Facebook is a layup. So we probably, if you want to take a trade in Facebook, any more down move in the stock market, and you're probably okay just to blindly go in with a trade. I'd go about 3 months out in duration on these trades right here, guys. Any of these stocks that you want to play, credit spreads, debit spreads, give yourself some time, 3 months down the road, because I don't know if we're out of the rate hike window. Looking pretty strong for December right now. Let's see, what's another stock that we have. I want to see how Mr. Softy is doing. Yeah, I don't want to play Mr. Softy. Yeah, Intel's getting clobbered. Intel's one of the best businesses, so you could probably just sell puts on this one right here if you wanted to. Just right now, just go in there and sell them at the money. Give yourself about 2 months. Again, that's a game I used to play all the time on these best businesses in the world. Get a down move like this, and I'd be all over it. Just selling puts. And then if they never worked out, I just roll the puts until they do work out, because they always seem to work out in these big stocks right here. These big blue chip best businesses in the world. Alright, hey listen guys, I think that's the only update that I want to show you. I just really don't have a good feel for the volatility products. SVXY, that's one we can play to the upside. You can see here this down move from Brexit, $40 up to 80. This run up was a double. We're getting some expansion. We get the down move here. The instant this thing closes back inside the bands, these volatility products are typically signals that we're about to get over. I don't usually. You can wait for the close above. We're not in this kind of a market like we were in January. We're more right now in a market like this where it just takes back off. Double thrust, takes back off. So SVXY, I guess we could play that one. It has, take a look at the options. It's a little wide. I would, I'd wait and see during the regular hours days if this bid ask narrows on SVXY. But this is one you can play. This is no wider than like UVXY. So again, this one right here is an inverse to the inverse, meaning that UVXY, has rallied right now. SVXY has plummeted. So this is an inverse to the inverse, I guess you could say. So a bet on collapsing volatility, if you can understand what I'm saying, is a bet that this one's going up this time, because it's the opposite to the VIX. So this is probably one credit spread or debit spread that you could use and take away some of the sting of that wide bid-ask spread. This is also one, even though it's a little higher priced, that you could just play directly from the long side. You could buy this one just like a stock. If you're in a portfolio margined account, you can do that and you won't get the full margin relief that you normally do in a regular stock, because these things are kind of leveraged. So if it looks a little different to you, that's why. So anyway, you may be able to find some shares, if you're not trading very large, to sell short in UVXY. Look at this, guys. This is UVXY. Split adjusted in February was trading for $300. This is what I keep telling you about these products. If there's any way you can short these things on spikes, even though it only looks like $20 is not very much right now, it will be in a year from now if this stock market continues going down. This thing continues to get split, reverse split, and you can just see that downward track of this. $300. If we could have gotten short this thing in February, it would have, well, you see. And you can just go back. We've looked at these before. You know, it's just incredible. At $750,000 a share back in January of 2013. So that's the downward spiral of these things, but everybody has that figured out, and the shares are very, very hard to borrow, and the options on these things are very, very high priced. So if you want to buy puts in this thing, man, they have got them priced to the point where it's almost not it's not beneficial to trade these from the pure options side. So the good trade is to be able to short it if you can find the shares. You can see here every time it hits the Bollinger Band, it typically falls away. So, you know, it follows the same trait that we've been talking about. Anyway, guys, that's a wrap. Some things to take a look at. We'll refine it more as we get close. And hey, have a good trading day. Tonight I will, or either Saturday, I'll publish the levels. And till then, it's BA signing out.